Hey everyone, Jeff Dorman, Chief Investment Officer at ARCA, back again for another edition of That's Our Two Satoshis Live, where we will talk about what is going on with the crypto markets. Happy to be joined by someone I've known for a long time in this industry, Tejas Nalval, who is the co-founder and co-CEO of Parataxis, who hopefully you guys have heard of. They've done some great work in the crypto industry. So thanks for joining me, man.
Yeah, happy to be here. Thanks, Jeff.
Well, good. You said you're happy to be here. The markets are getting hammered. For those who don't know, obviously we write at ARCA, we write about the crypto markets every week. We have a blog, That's Ours Two Satoshis. You find it on our website, ar.ca. Also, I forgot to say the disclaimer, none of this is investment advice. But what I was writing about was just, what were some of the plausible explanations for why we had such a big crash? And then whether or not these made sense or not. And I came up with like 6 things. And I'm curious what your thoughts were before we dive into detail on what those 6 were. But one was obviously the global macro events, everything from just last week with the 10-year Treasury ripping 50 basis points to the VIX spiking to obviously what happened with the yen carry trade and the Nikkei ultimately falling 12% on Sunday night. But also we had some crypto-specific news with Jump selling a big portion of their ETH, I think 550 million on Sunday. Those were the obvious ones to me, but then maybe there are 3 or 4 residual potential factors, one being the Bitcoin and ETH ETF flows slowing to being possibly negative, Kamala Harris jumping in the polls versus Trump, maybe viewed as anti-crypto, maybe Middle East tensions, and maybe still a little bit of looming supply overhangs from whether that's Mt. Gox or government sales from Germany or the U.S., or even potentially Genesis. Of those 6 factors, what do you think is true? What do you think is most relevant of what I just mentioned, or are there others that I missed?
Yeah, I mean, all of that's plausible. You're talking about 15 years of leverage just being unwound with the carry trade. I think specifically with crypto, I think we're in a paradigm now where you have very large traditional shops that are going to use a liquid asset that trades 24/7 as a hedge against days like yesterday, and I think that's really what happened this weekend. It's plausible that a number of market makers, traditional prop shops, knew that there'd be a large unwind the moment Asia opened, and we're trying to get ahead of that by shorting Bitcoin, by selling really anything that they had in their balance sheet.
When you say that, do you think, because we've seen that in the past, right? We've seen that because crypto is a pretty liquid market, open all night and all weekend, you tend to see a fair amount of front running. Do you think it was that obvious of a trade that it was going to be that sloppy on Sunday night? And the reason I asked that is that if you look at a crypto chart on Saturday, it was dead still. Nobody did anything.
Yeah.
And then it started pretty early on Sunday morning. Typically, when we see a trade like that, that's front running markets, it happens later in the afternoon on Sunday or closer to U.S. equity futures opening, or certainly, Asia opening. This happened a good 12 hours. It was odd timing, I guess is what I would say, if you believe it really was that obvious of a trade heading into the Monday Asia session.
It's not obvious to us here in the U.S., but I think if you had some insight as to what sort of sell pressure would take place on the Nikkei on Monday morning in Japan, if you're a traditional shop, I think using Bitcoin as a hedge makes sense. Nikkei opened limit down, right? So it clearly there was sell pressure from traditional assets. It's folks, if you're a trading desk in Asia, you talk, and this type of, you and I both know this type of dialogue happens all the time. So Bitcoin is liquid enough where it can serve as a legitimate hedge in the short term. I think what happened today, this morning, as the market rebounded, that hedge needed to be unwound, and that's why most crypto assets are ripping and really outperforming stocks at this point.
Yeah, outperforming on a daily basis certainly, but I mean, if you look at the magnitude of what happened,
yeah,
over the last 7 days now, you have crypto down anywhere from 25 to 30%. U.S. equities are only down 4%, and they're still almost flat on the month. And the Nikkei gained back 75% of what it lost on Monday. Obviously, it's still down quite a bit from the 2 or 3 weeks ago. But wouldn't you expect, if this really was mostly related to just the Asia unwind, I would have expected a much higher beta bounce from crypto, right? Like, doesn't the magnitude of crypto's losses relative to their other markets now mean that there were other factors at play?
Yes and no. Crypto is still not an efficient asset class. So just because we believe that mean reversion should take it back to where it was last week, it may just happen at a different time horizon. What ends up happening, at least this is a speculation on our side, what ends up happening in days like yesterday, where you see a 5 sigma event with market makers, all of a sudden they have to take the other side of trades on various exchanges and various order books. So to raise capital, to raise cash, to actually do that, you're fire selling everything. That's usually why you see somebody altcoins all of a sudden, the bids are just removed from order books, and all of a sudden some alts move down 20-30% in a day, and it's usually just a function of where market makers are placing their bid and asks. That type of dynamic, it does take a few days to in a normal market to go back to a normal state. So that's why you kind of see this huge movement to the downside on days like yesterday. You may not see a bounce back as quickly, but I'd expect, if assuming there's some normalcy in the equity markets, I'd expect this type of trend to continue for the next few days.
So where does Jump and their liquidation, because again, going back to the timing of it, there's a couple theories, right? Like either Jump was tied up in this yen carry trade themselves, and they were using crypto either to front run the pain on Monday, or because it was being used to sell collateral to be able to top up on the yen carry trade. Or maybe it was completely separate, right? Maybe there was regulators with guns and at the back of the traders' heads on Sundays saying, "Get out of all your crypto," because of all the, I'm not gonna say criminal, but all the nefarious stuff that Jump has done over the years between FTX and Luna and everything else.
Yeah.
Do you think it's clear from a timing standpoint when Jump started to really move wallets and sell that triggered the selling? So do you, based on your theory that this was really to front run market makers front running the Asia Open, do you think Jump was involved in that? Or do you think it was separate?
I don't know if they were deliberately involved. They definitely did unwind a large portion of their crypto book. It's the beauty of blockchain. Everyone can see that. It's a double-edged sword at times, because the moment you start seeing big movements and legacy wallets like that, it just it triggers a fear, and information tends to move very, very quickly in the crypto space.
Right. The opposite of that would be what we saw with Buffett, right? Buffett sold his Apple stock like 4 months ago, and it just got revealed last week. And you have a 3-4 month delay from when it actually happened versus when it was announced.
Exactly right. But it lines up. I think Jump is dealing with a lot of things across the regulator front as it relates to their crypto businesses. I've seen folks. I've seen some chatter that they may be winding down their crypto business. Some chatter that maybe they're shrinking it somewhat. Again, they're a very large market maker. They're in my mind, I think we want large market makers in the industry, just so we don't see days like yesterday. But again, it's all speculation.
Well, look, what we know for sure is that the Jump trading team are not dumb, right? They're not selling on an illiquid Sunday morning just for fun. They're either doing it's one of 3 reasons, right? One is they were actually front running a nasty Monday, right? And this was just the only way to reduce risk on a Sunday morning, and they are willing to take poor liquidity to do it. 2 is they had someone gun to the back of their head, whether it was a margin call or it was a regulator, but somebody telling them you have to sell.
Yeah.
3 is they were stop hunting, right? They saw an opportunity to make money pushing the market down. Either they had puts or they knew they could buy it back lower or whatever. So it definitely was not done accidentally. So in terms of where that puts us, and by the way, the other factors I mentioned, any of those give any merit? Do you think are you tracking crypto's rise with Trump's success and vice versa? Do you think any of the Middle East stuff mattered? Any of the supply issues that are still there? Like anything else affecting markets right now, in your opinion? Or is it really just all eyes on the global market uncertainty and the VIX and the yen carry trade?
I think the outcome of the presidential election in the U.S. will have a short-term effect on price. Let's be honest. For the past month, Bitcoin has been a trade where one would expect Trump or the Republicans to win the election. That dynamic's slowly evolving. So I think that has to get priced into the market, depending on, what that looks like come September, October. That's one narrative I'm seeing, but I think if I'm being honest, it's a narrative at this point. I think a lot of what we saw over the past few weeks has been related to the unwind of the carry trade.
So we've been on record. We've been pretty aggressive buyers, and we continue to buy. Again, just in our opinion, this is a technical sell-off, not a fundamental one, right? A large-scale liquidation of some yen carry trades, which again has been a 15-year trade. I mean, this has been going on, almost as long as I've been in finance. That's a technical couple-day thing, and you move on, right? Where it becomes more than that is if it starts to break things, right? Do you have a massive hedge fund that unwinds? Do you have a FX or repo markets break, something where swap lines have to be introduced from the Fed or other treasuries around, or other central banks around the globe? Do you think that there's more to this? Do you think it's largely over? I mean, we've been buying because we just cannot understand why this is a 5x beta move for crypto relative to other markets when you already have the VIX retreating, credit markets are stable. I don't believe a recession is anywhere close to nearby. I thought the calls for an immediate 75 basis point cut by the Fed were just ludicrous. So those are the reasons we've been buying. What have you been doing with this melt-off?
Yeah, I mean, anytime we see forced selling, we're generally buying. We've done the analysis. Anytime there's a structurally driven forced sell in the market, usually, the last time we had that was with FTX and the blow of FTX. We saw Solana take a very, very large hit in November of 22, but then mean revert pretty aggressively at the turn of the year.
Mm-hmm.
So that was one moment where we actually made a discretionary call to go overweight Solana, and it worked out very well. There are times when taking the other side to a kind of a black swan event on Bitcoin has paid out really well. So the China ban in 21, taking the other side in May of 21, that worked out really well. This was another structural issue. This is for sellers getting out of the market on a weekend, like you said. So the fair value price of really any crypto asset isn't really reflective in where things are traded. So we were buying pretty aggressively Sunday night and really, really early Monday morning. And that's, it's our view that's in moving forward 90 days, that'll be a very, very good entry point for us. So anytime there's this forced seller, we're generally buying.
Yeah. Do you think that mean reversion has already happened given the 10, 15% bounce off the lows? Or do you think in some cases, maybe 30, 40 off the lows? Or do you think again, we're using Bitcoin and ETH as a proxy here. We're still well below kind of the Sunday morning levels. Certainly back above the peak fear Sunday night, Monday morning. You mentioned a 90-day trade that would, I assume, put us at much higher levels than where we are today before you'd unwind this.
It hasn't fully happened yet. And I'll take you back to March of 2020. Market dipped pretty heavily, kind of bounced back a little bit. Then it was a range bound for a few days before then moving, meaningfully higher. So I think, there's still a period of a little bit of uncertainty right now. I think if the market finds a level here, and traditional assets find a level here, I think that's when you start seeing Bitcoin really all crypto really outperform.
So one thing you and I have in common is we focus a lot on the liquid markets. Obviously, a lot of the people in crypto focus on private. I know we both do privates as well, but we certainly have a liquid focus. When part of the problem we're seeing in crypto has simply been there's just a lack of capital in the system right now. What do you think it takes to drive real capital inflows back into crypto outside of whatever retail and FA bids you're getting into the ETFs?
Yeah, into liquid markets, it's a function of the market cycle. So I think Bitcoin hitting a psychologically significant level, just wakes folks up again, and everyone's talking about 100K. 100K is six figures. Number one, it's about a 50% point higher than the previous all-time high. Maybe a little bit less. So it's a level where I think it's hard to ignore. You're going to have folks coming into the ETFs, find a fair amount of passive assets are going to be tied to the majors, but then you're going to have a handful of investors, family offices, RIAs that are willing to pay for alpha, and I think that's where liquid funds are going to be on vogue again.
Great. Well, last topic here. Every single time there's a massive kind of global macro market event, you start to hear the naysayers say, "See, Bitcoin didn't hedge your portfolio." I have my thought on this has been pretty consistent over the last 6-7 years, which has been Bitcoin is a really good hedge for lack of faith or trust in banks and governments, but it's a terrible flight to quality asset in market turmoil. Meaning, anytime you see something like when the Canadian trucker protests or Cyprus banks or the March regional banking crisis, Bitcoin has gotten a bid, right? When there's something that questions your faith in your local government or your local currency or your local banks, there is always a rush to assets that are bearer assets like Bitcoin. But whenever we see like geopolitical risk or technical risk or leverage blowups or anything that's like just a market factor, the only true flight to quality is treasuries. You don't even see gold really act as a treasury in that. Where do you come out on that?
Yeah, I agree. It's in the short term, and days like yesterday, it's a risky asset. I don't think there was really any macro trader, moving to Bitcoin as a flight to quality. But over the course of 20 years, what's going to retain more value? Is it going to be fiat currencies? Is it going to be gold? I think Bitcoin will probably outperform really any other asset class. But it's volatile in the short term, right? And it's just, again, I think it's just that's a function of it just being a very young asset class. It's just a little bit more than 10 years old, so it's still pretty young, but it's volatile. So I don't think you and I agree. I don't think we've ever classified Bitcoin as a flight to quality or something that you would use to hedge day-to-day volatility.
I think it's more of a marketing issue too. It's like this idea of digital gold is just wrong to me. I mean, if anything, it's anti-government, anti-bank protection, right? You should almost think of it as, shout out to Greg Foss. It's more of a credit default swap against governments and banks than it is, digital gold or any sort of a macro asset. So I'd like to see that narrative change. I think digital gold actually holds our Bitcoin back quite a bit, simply because, I've been doing this for 25 years. I've probably talked about gold 6 times in my life with any serious investor. Like, most investors don't care about gold. It's for boomers and macro doomsdayers and central banks. It's not for any real investors. So I think the idea of credit default swap or portfolio insurance against counterparty risk in banks and governments is a much better way to describe Bitcoin. And hopefully that catches on over the years.
Yeah, that's fair. Whatever works. Listen, on the, I think marketing is different on the FA side. I think the way BlackRock and some of the ETF issuers have to market this to traditional RIAs, it's a different marketing pitch. I think for folks like you and I, we view Bitcoin as a trading instrument. There's utility to it. There's utility to many crypto assets. But again, we're over the short term, it's going to be volatile, but it is also in a period where there is growth in the markets. It is going to be the fastest horse that's going to outperform. So it makes sense to have in a portfolio.
Great. All right. Well, we're both bullish. We both bought the dip. We'll see what happens from here. Let's get you out of here. Where can people find out more about you, Parataxis, your thoughts on the markets? What's a good way for people to follow up with you?
Yeah. So our website is parataxis.io. info@parataxis.io. Happy to have a conversation with folks. We're U.S. based. We're all of us are based here in the U.S. So happy to have a conversation. And that's otherwise Tejas, my first name, THEJS at parataxis.io.
Great. Well, thank you for joining me, especially on short notice and volatile markets. We'll let you get back to the trading session. And here's hoping next time I have you back here where it's significantly higher prices. Thanks again, Tejas, for joining. Thank you all for listening. We'll be back again next week. And again, you can read the blog for more details on my thoughts on the market at ar.ca/blog. You can find me on Twitter, jdorman81. I've actually been writing quite a bit lately about the markets. I actually kind of feel kind of alive right now. It feels interesting again. Instead of just tracking ETF flows, we have something interesting to talk about again.
That's right.
I appreciate it, man. Good luck with everything. Talk to you soon. And thanks again for joining. Take care.
Thanks, Jeff. See you.